Canadians are alarmed by this hot market, and a lot of them would like to see the central bank to raise the cost of borrowing to damp this demand of the housings. But there are some consequences, so please watch this video and you will understand a little bit more about this. Canadians are freaking out. This is unbelievable. Canadians are so alarmed by the red hot housing market that many say that they would like to see the central bank to raise the cost of borrowing to damp demand for real estate and stabilize prices. Have you ever heard something similar from anyone in the past? It's just unbelievable. Lots of videos on YouTube are talking about house market crash. I had a video that here on my channel that talks about this subject, and you might take a look if you want. Just click on this link here below, above, and you will go to that video. But just going back to the subject, the Canadians are freaking out about this situation. There are lots of Canadians that somewhat are in favor of the Bank of Canada raising its overnight rate to slow the house price. Right. Well, one important thing is they forget that the movement like this one also will increase the cost of the credit line, credit cards, and other debt. This is a major issue at this point. Even some economists at the major banks have called on the government to act to reduce the demand. But at the same time, the Bank of Canada has made it clear it won't raise rates until the economy absorbs excess capacity. Some people are very happy with their assets growing, but because the prices are so high, it's more difficult to young couples to afford buying a house. And the gap between those Canadians with properties and those without have increased. In Canada and US, the home ownership has been long seen as essentially securing a place in the middle class. Canada has one of the highest home ownership rate, roughly around 69% of the Canadians own a home. So when you compare to 60% in UK and 61% in Japan. You can take a look if you want in this article on Bloomberg about the freaking out Canadians open to high rates. I have added a link just below, so if you click there, you go direct to this article. Well, I have seen some changes on this frenzy market with the multiple offer situation. In some places, it has decreased. The other ones still have some competition. I have some clients that were trying to sell, and there was not so many offers out there like it used to be. And at the same point, I have some buyers there still finding some issues with the multiple offers at this point. Lots of Ontario baby boomers, like myself, are selling their larger homes in this hot market to be able to help their kids to enter in the housing market. But even with the help for the down payment from the parents, the aspiring first-time home owners are still stuck with the need to qualify for a mortgage. And not only that, there are new rules that will take in effect just a week from now, which is in June. Starting in June, home buyers will have to show that they can afford the greater of either the Bank of Canada new 5-year rate 5.25, it was 4.79, or 2% higher than the mortgage rate they are looking to secure with their lender at this point. Whichever is the two is the greater. Well, and this change apply both for unsecured mortgage, where the borrowers are contribute at the minimum 20%, or those ones that have insurance mortgage where the borrower make a down payment less than 20% on a property that they purchase the price below $1 million. This move is meant to cool the market, but the very anticipation of this change is doing the opposite. Well, you can ask me all your real estate questions. Just add some comments below and I will reply with some information.